Hey guys, Max here.
Hi, David Zimi.
Welcome to Coffee with David and Max.
How are you, Max?
I'm good. It's been a good day. It's been a good week. Had a good weekend, and
Awesome.
It's time to start doing some business again.
It is. I was thinking about what are we going to talk about today.
What do you think?
And, as we're getting in the age category of 50 plus,
Yeah.
Thanks
for reminding me.
But you know what? It's a good thing to talk about because, I don't know if the clients out there or consumer know what they could do. What are you doing for your retirement?
Oh, interesting you bring it up. I was just having some wine with a client friend of mine over the weekend in Livermore, and we were talking about 401ks and IRAs and SAP IRAs and stock portfolios and all that stuff. That's all tax deferred, meaning you can't touch it till you get to retirement age.
Correct.
And he was telling me that with all the volatility in the stock market, with what's going on politically, what we have going on with the fires in California, the uncertainties that we have, how worried he is that his 401k account may be taking a significant hit if the stock market drops, which none of us will really know because we're just not that close to that action, and just being concerned that he wouldn't be able to recover. Like if we take a hit like we did in 2008, where 40, 50, 60% of our accounts get wiped out.
Right.
We don't have the time to catch up again because it took 6-7 years to catch up. So if you lose 60% and you're 55 years old, now you get to retirement age and suddenly you don't have enough money. Interesting enough, did you know that you can use your 401k or your SEP IRA or any of those retirement accounts and use that money instead of putting it in the stock market? Did you know you can buy investment real estate with that?
No, I didn't.
Yeah, you can.
So I knew that, you could borrow against your 401k for the down payment.
No, that's different.
So really, can you share that with us?
This is not about borrowing money. So, when you get into a financial hardship and you want to go to your 401k and you can borrow up to 50% and you have X amount of time to pay it back, that's not what this is.
Okay.
This is truly converting the funds that are now, usually they're being held in mutual funds.
Correct.
Or gold or oil or whatever you invested in, it just gets converted into real estate.
Wow.
Yeah, so the way it works, there's different companies out there. I work with one in San Francisco, and so you as the person can touch the funds.
I cannot.
No. Do not go to the bank, withdraw money out of your 401k, and start buying real estate. You get really penalized.
So you got to hire a professional.
It's not like you hire a professional. It's just like when you allocate your funds into a mutual fund and there's someone managing it. Now there is someone that will be investing it in real estate and you hire them. The difference is you will be purchasing the real estate.
Oh, I see.
So you can just literally go out, allocate the property anywhere in the United States, by the way. It
Like
doesn't,
a 1031 exchange, you mean?
Similar. Yeah,
Okay.
but anywhere in the United States. So you can literally, if you believe that Alabama, which I happen to believe, being a good state to invest in real estate because prices are so low there and rents are pretty high, you can literally take your 401k money, buy in Alabama, and get the residual income, the rent,
Right.
and it gets deposited into your 401k account again.
Wow.
So now you have a tangible asset that if Wall Street goes, the way we don't want it to go, you can actually use this as your return investment. And when time comes to retire, as you would cash out your mutual fund, you can just sell your real estate and liquidate it. It's the exact same thing.
So my question to you on this part is that the profit that you make from the rental income that you're going to gather from this property, this asset.
Yes.
Not only you got the asset now that's going up in value.
That's right.
You could put the profit back into your 401k, so it's a win-win situation.
It's not that you can put it back in your 401k, you have to put it back in
You
your 401k.
have to.
You cannot touch the money.
What
Period.
happens if you touch the money?
You get penalized 10%, and then you get taxed according to your tax bracket. So
On the money that you borrowed.
no on the money that you earned.
Okay.
So if you would take the profits, the first thing they do is they take 10% as a penalty. Don't do it again. And then they will charge you 30, 35%, depending on your tax bracket, as income taxes. It's way too expensive money to do that. If that's something you're thinking of doing, don't do it.
Okay.
Don't do it.
You know, that's why I team up with Max. We have coffee and
Yeah.
chit chat. And the key is that, you know, he has so much knowledge about this.
Yeah,
Because
thank you.
today, you know, we sat down and we talked about it. I wasn't aware of this. I mean,
Yeah.
this is amazing information for the consumers out there.
It's a real good opportunity for people our age. You
Right.
know, I'm going to turn 55 next week or next month. I'm glad to share it with people.
25.
And you look at, you know, give us a call and sit down with us, and we'll introduce you to the right people. If that's something you're interested in, if you really want to diversify, and it doesn't mean that you have to turn all your assets into real estate. There's nothing wrong with having a balanced portfolio, like every investor. Financial advisor will tell you it's all about diversification. But you know, if you believe that real estate is an asset that you can be feeling good about at the end of the day, this may be the time for you to make a change and get some of that money out of Wall Street, put it into real estate, and feel much more secure. So give us a call if you think this is something you're interested in. I'll be glad to sit down with you, and there's a lot of detail to it. Again, don't do it on your own. You got to get expert advice, because there are some real penalties if you do it wrong. So, but
Thank you so much, Max. This was
Yeah.
great. And you know what, guys? Thanks for watching, and catch you on the next one.
thanks, guys.